Not everybody can build a bed, but no matter what you can't do, with us, you can build wealth. Our top-performing unit trust property portfolio was created with a combination of high-performing real estate investment options. Call us at 876-960-5000 about building your wealth today. Not everybody can be a top-class pizza chef, but no matter what you can't do, with us, you can build wealth. With a VM Wealth Global Income Max US portfolio, you could be on your way to your wealth goal. Let's get you started. Call us at 876-960-5000 about building your wealth today.
Good afternoon, everybody. Welcome. I'm glad to be here, and I'm happy to have everybody else with me this week for VM's Wealth Talks. I am your host, your moderator for the evening, Randy Rowe, and we will be having a spirited discussion, if you will, about things that really get me excited, things that get me passionate. When you hear me talking about making money, talking about financial literacy, saving, investing, and really impacting the pockets of regular Jamaicans, that's something that speaks to my heart and my pocket. Right? And along those lines, we have a wonderful team today from VM that will be helping us delve into some of those topics. And of course, speaking about the main topic this evening, which is equities, and not just local equities, but also US equities. Along those lines, we have a wonderful team that VM has put together for us. And we will be speaking at first with this wonderful lady on my left here, Ms. Denise Marshall Miller, who is the manager of bond and equity trading. Did I have that right?
That's correct.
Correct. And on my right, we have Trace, who is a wealth advisor, as well as a special guest speaker who is coming to us directly from the US, Mr. Chad Morganlander, who is a senior portfolio manager and the co-founder of Washington Crossing Advisors. So welcome, everybody. Feel free to get your questions warmed up, throw your questions in on social media. We're going to be going through them also as we go through this evening. And of course, we start things off with Denise. So Denise has had over a decade of experience in fixed income trading, deal structuring, corporate and sovereign bond trading, US and treasury management. It's a long list.
Oh, yes, and equity to be added.
And equity has been added, of course. So, giving us an overview of the local equities market is what she'll be doing, and she'll also be talking to us about how we can capitalize on those opportunities, right?
Sure.
All right. So with that said, Denise, what would you like to begin with?
Okay. Thank you so much, Randy. It's an absolute pleasure to be a part of this panel, to speak about something that I'm also very passionate about, wealth creation and using stocks to get you there. So I'm quite excited to be a part of this panel. So one of the first things that persons make note of is the risk of investing in stocks. Mm-hmm. And with any investments, there are risks. But I must admit, with stocks, it's a bit elevated. However, with some level of structure, planning, you can mitigate a lot of these risks. Mm-hmm. So to name a few, take for example, is economic risk. The economy just changing at you based on your investment. A perfect example is 2020, the onset of the coronavirus pandemic. Mm-hmm. You made this investment and suddenly everything changed. If you're considered to be a younger person, you would need to pivot and to strategically look at averaging down, making incremental purchases to add to your portfolio for those stocks that have fallen significantly. You want to be picking them up at those rock bottom prices, but not going out all at once to make purchases. It has to be strategically done. Mm-hmm. If you're considered to be older and you are more on that retirement side, a significant portion of your equity portfolio should have been reduced from the equities market into fixed income. I do believe even at that stage, you still need a small percentage in equities. Mm-hmm. We're living longer, there's inflation, and you need that boost to your portfolio. But essentially, as I noted, you can mitigate these risks. Another notable risk is the whole inflation risk. We know that once this beast gets too high, it can it can reduce your value of your assets. But also, investing in stocks helps to protect you to somewhat, because these companies that are listed on the exchange have adjusted their prices in terms of being able to make the changes to their prices. And as a result, you will be able to get that benefit. A lot of these consumer products are able to pass on these prices to the consumers. And there's also the risk of investment stagnation. You make the purchase, and the stock is not going absolutely nowhere. It's not appreciating in prices. It's not declaring a dividend. That also happens. The possibility of the company become delisted, that also exists. But as I said before, all of these risks, you can somewhat reduce the exposure of these risks, because you would not be able to create wealth, grow your investments with just fixed income. So the risk and reward goes hand in hand.
That is true. And of course, as you've said, you've moved out a lot of the risk. You've talked about mitigating a lot of the risk. But of course, going into the market, you have to have an idea about what exactly the performance is. So in terms of the last 5 years, let's say, what's the kind of overall performance that you've seen?
So the Jamaica Stock Exchange over the last 5 years I've really appreciated. If you look from 2015 to say 2019, it has been on an upward trajectory. Within that period, Bloomberg would have named the Jamaica Stock Exchange as the best performing stock exchanges in 2015 and 2018. Within that period as well, a number of new investors came into the market, which was absolutely amazing. The education, the information, getting out there and getting persons interested in stocks really achieved that. Within the period as well, you had a number of listings. More than 25 companies came to the market, and you had a lot of persons participating, particularly in IPOs. So for the entire period up to 2019, the market has been on an upward trajectory. Of course, 2020 hit, and as a result, the market somewhat fell because persons were taking cover, trying to protect their investments as a result of this pandemic, not showing how long it will last, and it is understandably. But since the start of this year, if you were to look year to date, the market has been somewhat flat with different spikes, and however, the outlook is quite promising.
Awesome.
It is, because when you look at the fact that the restrictions due to the pandemic is somewhat being lifted, when you look at tourism, it's actually forecasted that by the end of this year, we should get to a pre-pandemic, pre-COVID level. Is great. And once you have that industry opening, it's going to have spill-off effects. Companies that directly link to the tourism sector are going to benefit. Also entertainment. So the manufacturing, the distribution companies are going to also. So the future in terms of the outlook for the market is quite promising.
Okay. So you mentioned that there are a lot of IPOs that a lot of people participated in, and of course the general market itself, and you give us a little bit of your outlook. But I know that one of the features of the market that has happened in the last few years is ETFs, exchange-traded funds. So, and if you can give our viewers a little bit of an idea about exchange-traded funds.
Okay, so essentially, in a very simple way, exchange-traded fund is essentially a basket of a particular assets. It could be stocks, it could be commodities, and this basket is essentially tracked. So take, for example, in the overseas market, you have the S&P, companies that are listed on the S&P. You have an index. That is an index. And as a result, if you wanted to gain exposure from these companies without buying all the companies there, you could buy that index. Back home, we have a similar example in that if you want to get exposure in the financial industry, there is the Sagicor Select Financial, what is considered to be an ETF. If you wanted also to get exposure in manufacturing or distribution, you could also buy the Sagicor Select Manufacturing and Distribution Fund.
Okay. And so those are some of the options that are available to general investors. All investors really know. And I remember you were telling me a little earlier that I won't get too technical, but they are all currently cheaper than their inherent value, I think.
Yes. So these ETFs or funds they have what is called a NAV, net asset value. And this is essentially the assets less the liabilities divided by the assets that are in that fund. And it has a price. Based on where these ETFs are trading at in the market, they're trading below the NAV price. So inherently, there is an aspect of value because you're saying this is value at $1. However, I'm able to pick it up less than $1 on the market.
Wow. Wow.
Yeah.
I like that. So that shows that not only is there opportunity there, but there is probably increased opportunity to come, especially as you say, as the COVID-19 pandemic sort of eases and we sort of go back to maybe not the new normal, but a newer way of working. Yeah. So I really like that. And I like that you mentioned the risks also. You really removed a lot of the fear that a lot of people might have. Really doesn't sound intimidating to me. And I think maybe a lot more people are a lot more, let's say, willing to try it, if not in individual stocks, as you say, the exchange traded funds, which is something that's available.
Yeah.
I really like that, and I like that you're talking about the local market there. But remember, viewers, we're not just dealing with the local market. We are also going to be looking at the US market. So along those lines, and I should remind you, you should keep your questions coming on social media. We are going to answer them as much as we can. We are discussing equities today, and as I said, the U.S. market is the next bit that we have coming up, and at that point, and on that point, we have Chad Morganlander, who is joining us from the U.S. to speak about that. So Chad Morganlander, just to give him a little bit of an introduction, he's Senior Portfolio Manager and co-founder of Washington Crossing Advisors, right? And he brings nearly 25 years, do I have that right, Chad? 25 years of financial market and investment advisory experience?
Yeah, it's about that, about 28 years.
Wow, so you're getting a lot of experience here, viewers. So he's a co-portfolio manager across each of the group's investment advisory programs, and he regularly comments on the global economy, the financial markets, and various media outlets. I believe, Chad, you were just recently on Bloomberg TV, right?
Yes, the other day.
All right, so I'm really happy to hear that. I'm just showing you viewers that you're getting a wealth of experience here as a result of this session with VM to thank for it. So, Chad, I will allow you to tell us very quickly, or not very quickly, but very carefully, in a very clear way about the U.S. market. Maybe with an overview at first of how you see the market currently.
Yeah, absolutely. Before I do that, I wanted to kind of just say one thing. Denise had it spot on about investing in the long run. One that is investing or is new to investments should consider when buying a portfolio of stocks, looking out many years when they're buying a company and allocating towards equity and bonds, almost as if you're buying a farm or a house. By doing that, you won't get whipsawed in a market that can from time to time be quite volatile. So that was one thing I wanted to mention before in getting into the overall market overview. The general overview over the last 5 years, the equity markets have been quite, here in the United States, but also across the globe, quite robust, moving in a very upward trajectory, and has happened on the back of good earnings, very strong fiscal policy from the United States, as well as accommodations from the Federal Reserve. The Federal Reserve has been extremely dovish even before going into this pandemic. Why I say that is because they still had a tremendous amount of assets on their balance sheet. Their interest rates regarding the Fed funds rate were quite low before the pandemic. Although they were rising, they weren't at all too hawkish. But with that, the U.S. economy and the stock market actually over the long run are tightly correlated. And what that means is that as economic growth moves higher, the stock market over the long run moves with the economy. So what we are seeing currently in the United States is a market that is coming back from COVID and the issues that happened in March of 2020. The economy today is actually up around 8% year over year. And in the second half of this year, we think the US economy will be back to where it was in 2020. Now, let's take a step back for a moment and talk about last year, because last year was a very unique time in finance. You never had a time where the US economy dropped by 20% in one quarter. That's GDP. The Federal Reserve, as well as the fiscal policy, that is the federal government, were quite supportive of the economy. So what did they do? One thing they did when it comes to the US government is they went out and they printed a lot of debt and then supplied it to the private sector, not through the banking channel, which they typically do, but rather what they did was they literally gave American citizens and small and mid-sized businesses checks. Therefore, what you saw happen for the first time is the savings rate actually in the United States went up and the economy went down. That has never happened before. So now coming out of this COVID recession that we were in, you have a tremendous amount of pent-up demand. Also, you have a consumer that has a tremendous amount of savings to spend. Companies also here in the United States are aligned for corporate spending as we start to come out of COVID. Now, there's a couple of things that investors that are looking in the United States and across the globe need to consider. One, what Denise mentioned was you may have some inflation. Is that inflation temporary or is it somewhat permanent? Two, what will the jobs numbers look like over the next 12, 18 months? And how will that affect inflation trends? Because currently in the United States, they're having a hard time, businesses, finding employment. Hence the reason why you're starting to have inflation. Now, another reason, what that does also is it could lower economic activity, which is one of the reasons why the bond market here in the United States, interest rates haven't skyrocketed or gone up quite all that much. Our 10-year bond is trading at 1.45%. That's 1.45. The inflation rate is 3+%. That is what we call a negative real yield. That is a very rare that's very rare in financial history to see interest rates way below the inflation rate. One of the things that's doing, it's causing actual valuations here in the United States to trend higher. And now we're at a point where PE multiples and any valuation metric that is conventional by the financial industry standards look elevated from a historical perspective. Now, there are a couple of things that could happen. One, you could start to see rates normalize. And if that was to happen, like Denise mentioned earlier, you could see a revaluation of the financial markets. Not all that bad, but it could certainly happen. Secondarily, you could just see, in order to fill in this valuation gap, you could see the markets or the economy improve drastically. It also could do that. It'll just be a matter of time for that to happen. It doesn't happen overnight. It could happen over the next 3 to 5 years. So in regard to how one should align their portfolio in this type of a market, as portfolio managers and equity portfolio managers, we are looking at highest quality companies. We think that at this point, there's a low return expectation for the S&P over the next 5, 7, 10 years, based off of the valuations and based off of inflation trends. We think the seam of opportunity for investors should be towards these high quality names, buy them and own them like a farm, like you would own a farm. Look at companies that have a very, very distinct quality. They should be companies that are very consistent and have a consistent track record for earnings, meaning the earnings are moving higher in a very deliberate fashion. It doesn't have to be gangbuster earnings, but it should be moving higher. Revenue growth should be very stable and moving higher. And buy companies that are reinvesting back into themselves, that are doing that to grow themselves. Lastly, when it comes to these type of companies, you want to buy companies that don't have a lot of debt on their balance sheet. Debt creates fragility. We don't like companies that have that, because also in times of uncertainty, similar to financial planning, one doesn't want to own a company or have a lot of debt, because you never know when times of uncertainty come about, that when that money will be needed. That is the type of quality names that we're looking at, and we are at Washington Crossing Advisors. We are buying companies that are rising dividend names. So every company that we're investing in should have a history of 5 years of increasing their dividend. That's because we believe increasing the dividend for a company is the watermark of quality. Also, when they're in the portfolio, we would advocate for the company to increase their dividend. If they don't, that is a major no-no. Now, seams of opportunities within these type of quality names to look at in the United States. We're looking and we're overweight 3 sectors. Sector number 1 is healthcare. The healthcare sector has not done very well, meaning the stock prices have not gone up considerably, but yet the earnings in healthcare have been quite robust and have moved higher. So in a high-priced market where valuations may not make sense, you would want to look at the healthcare sector here in the United States. Several names to perhaps think about are Becton Dickinson. They are a medical company that makes syringes and products of that nature. They have over 1,000 SKUs. The PE multiples are very reasonable at roughly about 18, 19 times, with very little debt on their balance sheet, and again, a rising dividend thematic. The second healthcare company maybe perhaps think about is United Healthcare. They're an HMO here in the United States. When it comes to another sector, sector number 2, we like consumer staples. So one could look at a company like a Hormel, which it makes Spam and other snack foods. This company has been growing at roughly about 3 to 5%. Their dividend has grown over the last 50 years, and they don't have a lot of debt on their balance sheet. So both of these companies that I both mentioned, all three of them increased their dividend in 2020, even in a pandemic. Lastly, when it comes to the sectors to look at, another sector I would look at is industrials. The industrial sector will benefit from the reopening of the global economy. Here in the United States, the industrial sector has not done all that well in the last 24 months when it comes to certain industrials. We would look at companies like Lockheed Martin, which is a defense contractor, Waste Management, which is a hauler of waste in the United States. They are one of the largest, if not the largest. That company we favor because as the United States gets more vigilant about recycling, this will increase the rates per customer for waste management. And then another company, another defense contractor like General Dynamics, also is reasonably priced. So that is our investment thematic here in the United States. We also, though, look outside of the United States, and I would like to touch upon that because every industry, every group is there. They don't live in a silo. Their investments are not in silos. So what happens in the United States, we have to also look at the emerging markets or the developed markets like Europe. And what we're seeing in Europe is a similar type of thematic like the United States. A reopening of their economy, a monetary policy with ECB that is quite dovish. They too have interest rates at historically low rates. In fact, their interest rate is negative. That has never happened in financial history. We went back to Babylon, the time of Babylon, that's never happened. And their fiscal policy is quite robust. So we would be investors also in looking overseas within the developed markets. You can look at the European community and try to pick out some companies there or some ETFs, as Denise mentioned. When it comes to the third part of investing or looking at the economy, the emerging markets as well is a place to perhaps look. So China as well as Latin America creates a very good opportunity, although it does create a tremendous amount of volatility. Understand the dynamics of the emerging markets in relationship to the developed markets. The emerging markets have roughly about 50% of the global economy. They represent 50%. The developed represents the other 50%. The developed economy has a total population of 10% of the world. So what I'm trying to say to you is that the other 90% of people on the globe are only represented in the stock market by that 50%. So please do your homework when it comes to investing globally, but make sure if you stay by the premise of buying quality names that are consistently growing and look over the long run, like how you would buy a house or buy a farm, I think you will do well over the long run. Really, investors have to look at the long run because the short run, many times the volatility could be quite unstable and it can scare people out of the market. So with that said, I just wanted to also express that if anyone that is watching this is interested in talking to Washington Crossing, please reach out to Victoria Mutual, to their wealth, to look into our portfolios, and we're super grateful to be a part of this symposium tonight.
Okay, so thank you very, very much, Chad. You've really given us a lot to chew on there. And remember, viewers, keep those questions coming. As Chad said, if you have any interest in what he's saying, you can reach out to VM Wealth, and they can certainly be the brokers to help you, put you in contact with Chad and get you on the U.S. market. And also, I'd like to just point out that if you are enjoying what you see so far, you should subscribe to VM Wealth's YouTube page and also the LinkedIn pages where they have these sessions weekly and monthly. There's a lot of insights there for you. So we've heard now about the local market, we've heard about the US market, and what we'd like to do now is to really touch on, in a practical way, getting started. So if anybody's watching and you're thinking about how do I get started with this, we would like to talk about getting started on the local market. And to help us with that, we have the wealth advisor, Trace Gale, who is really versed in that, I should say. So let me introduce you properly, Trace. You are a marketing and sales professional with 14 years of cross-industry experience. If I have it right, you're telecommunications, hospitality, communication, as I said, banking, finance, and now you're really still back in the finance world, but concentrating on local equities, right?
Right.
So I would start off right at the bat by just asking you, I'm sure somebody has this question, how can somebody get started in equities with VM?
All right. I mean, it's very simple. Pretty much all you need are your ID, TRN, government-issued ID, that is, your TRN, proof of address, proof of income, and 2 references. And there are a couple of documents to complete. That's a very simple process.
In and out very quickly.
In and out very simply. And what we do is we don't just onboard you and leave you alone to fend for yourself. We typically do our weekly stock picks where we give you a number of analysis on these companies and tell you it's kind of a to buy, not to buy, but not in the same words.
Well, I mean, you do use those words because you can, because VM does have
Yeah.
that power. So
what we do is give them the information on the company, tell them, I mean, just as Chad alluded to earlier, tell them about their balance sheets, and the recommendations are based on loans and stuff like that.
Okay. And of course, one of the options, not just in terms of getting started that VM offers, but you also offer some sort of financing. So what are the financing options available with VMware?
All right, so we have a number of financing opportunities at VM. I'll mention it, but not touch much on it, is our corporate financing. We have an entire department that focuses on corporate financing if you want to go on the stock market, stuff like that. All right, fundamentally on my side now, what we look at is a margin loan facility. So if you have a portfolio with us, what you can do is borrow against your portfolio. And depending on the assets in those portfolio, you can get a rate, not a rate really, but you can borrow, it will depend on the percentage that you can get.
Okay, so in simple terms, pretty much it means that if I have some stock, let's say, and like Denise pointed out, stocks we really want to, you want to concentrate heavily more on the long-term view with it. If you have some stocks there and you know you're going to have it for a while, VM offers you the opportunity to borrow against that asset.
Most definitely do.
Okay. That is a strong, strong tool that you have. Another strong option that you have is that if you don't have the time maybe to get into the individual stocks, looking on the actual individual companies, there are the options of going into unit trust, which VM does offer also. So if you can just maybe help the people who are viewing right now with an understanding of what a unit trust is and what's the best thing for them, what are the benefits of unit trust versus stocks?
All right, so plain and simple, unit trust is pooled investment. So what they'll do, they'll take my money, Denise's money, Chad's money, and we pool it together and invest in assets, all right? It's just as simple as that. What you get from that now are based on the NAV that is released. Denise would have explained how NAV worked earlier on, right? And we pretty much share the benefits of that, the income of that, right? What we do, the benefits of the unit trust versus the stock is that when you buy an asset outright, what you're faced with that risk, that complete risk. When you buy into the fund, that risk is shared among the owners of the fund. So instead of you bearing the risk of, say, one of the assets out there, myself, Denise, Chad, and you will be sharing all of that risk. So what happened last year when the market fell in excess of 30%, in a fund, you wouldn't have seen that entire 30% based on how the risk is shared. Exactly, because of the diversification of that fund.
And I should point out that not just the bad, but let's also look on the good.
No, there's a
because-
good side as
Yeah.
well. Thank you for pointing that out, for reminding me. There's a good side. Not all the case, it's not all about negatives. Predominantly, there are people out there who just don't have the time to focus on watching the stock market, choosing particular stocks, reading up, because it does take a lot in order to inform yourself. So pretty much what the unit trust does is what you do is buy into the fund, we trade for you. We buy, sell, and ensure that the portfolio works, because we have an asset manager, an asset management team that focuses on just that.
Okay, I like that. And I mean, again, people, there's no, it really is, as he's pointing out, it really is a strong tool in that it protects you, but also allows you to enjoy assets that maybe you couldn't afford on your own, right? So maybe I can't buy a hotel as much as I'd love to, but if 1,000 of us come together, the unit trust can buy a hotel, and then the 1,000 of us can benefit from the unit trust returns.
Absolutely. And what's amazing about, you touch on that very same topic, and I want to mention our property fund. So I'm invested in the property fund even as an employee, and I can tell you that I have interest in several buildings now. I feel like a millionaire, because the one on Knutsford Boulevard, or VM building, is owned by our property fund. Then there is the towers on Dominica. By myself, not now. I'm going to say in the future, but not now. I would not be able to buy that asset, but with the unit trust fund, I can have
Benefit
significant interest in those.
I like that. I like that. No, that is one option, as you've pointed out. If you want to get in under unit trust, because it allows a manager to really, somebody who has the time and the expertise to get into it with you. But on the individual side, there is the option of trading on your own, and VM does also offer that in conjunction with the JC's JTrader platform. So if you want to tell them a little bit about that.
Okay, so pretty much the JTrader platform is owned and operated by the Jamaica Stock Exchange, and we are participating brokers that uses the platform to assist our clients to trade. It gives you, real-time stock information, stock movement, buy-sell options, and you can utilize that to acquire your assets. All right. Once you sign on to VM Wealth, you are given a link, and that is what you use to just sign up for the platform, and you use that platform to trade and buy assets. Just buy and sell, depending on how you feel, because it provides the opportunity to buy and sell.
And I can tell you, as somebody who uses it myself, that it is probably one of I can unequivocally say it is the best trading platform currently within Jamaica. So for VM to allow the customers to get, their clients to get access to that, I think is one of the strong points in VM's favor. On the other hand, also, again, because it might not be for everybody, if you don't have the time, if your life don't allow for it, there is the time where everybody needs a little bit of help, right? A little bit of help. So Denise, I don't know if maybe you can talk to us about how VM supports the people who want to enjoy those sort of returns, but really don't have the time or the energy to do that sort of research on their own.
So we do have a number of clients that are not executing these trades on their own, not using the JTrader platform. And we accommodate them because persons are busy, persons are not able to do that execution. So within in-house, our traders are able to take your orders and to make these purchases if you're selling, to execute on your behalf, and actually to get the best pricing for you. So it's not a case where you just go onto the JTrader and you put on, this is where I'm buying or this is where I'm selling. What would happen is a more interactive approach would take place. Our trader would call around the market, try to source the best price for if you're buying or if you're selling. So that execution can be done or is being done at the trading desk.
That's true. Another thing I know from my own experience is that, as much as I like the act of the buying and the selling, it does require a lot of research.
It does.
It does require time. it takes the time to do research to make these investments. And the market is growing every day. There are almost 100 companies on the market
Yes,
now,
it has
and more
passed.
coming all the time. I hear recently that the JC is looking at adding, I don't know how true it is, but looking at adding 14 more companies between now and the rest of the year.
Yes,
So that
yes.
research really does take its time. So how does VM really assist with that?
So we, at Victoria Mutual Wealth Management, we have a team, a department that is dedicated to research. That's all these guys do. They are researching, analyzing, and doing proactive research, not just waiting on the numbers, but forecasting and predicting where these numbers may come out at, and as a result, to make recommendations. So a big part of our business, not just stocks, but the bond, the asset management, the corporate finance, it's driven by research. So research is a big area, a big focus for us. So we're able to do the research for our clients and give them the recommendation, and all they need to do is give the approval to execute.
I like that. And of course, they share that information, both in-house and with their clients.
Yes.
And it is constantly changing because we know the layout of the country, the economy, and with respect to the COVID-19 pandemic, things have shifted around very, very quickly. So I don't know if you might have maybe a few things you want to speak about in terms of picks along those lines, with an eye to what has been happening with the COVID-19 pandemic.
Certainly, it's a forum on stocks. It's stocking up. So I'm pretty sure persons want to hear what are some of those picks that they could add to their portfolio. So whatever the environment, there's always an opportunity. And we experienced the pandemic, and during that period, there were companies on the Jamaica Stock Exchange that did extremely well. So Chad would put them in categories such as utilities, staples, etc., due to the fact that our market is not that diverse. I will speak to a particular names, but they really are staples, or they are aligned to what is considered to be goods that are companies that are in demand. A perfect example a company that did extremely well during the pandemic was Grace Kennedy. They provide food.
They do.
Whatever the situation, the demand for their products are there. They outperform their prior year's performance, and they are expected to continue to do well as well. Companies such as Mailpack was able to pivot and to their services were in need of in the pandemic. Persons were restricted, and as a result wasn't able to move. Mailpack was able to form alliances with PriceSmart for you to order, and as a result for your goods to be delivered to you. And as a result, they're very innovative, and they're taking other measures. And I do believe they did well in the pandemic. They will continue to do well. And as I noted before, companies that are linked to the tourism sector will do well. Once we return to some level of normalcy, that is there. Another example is Honeybun. Honeybun did well within the period. And once schools are open, the activities have gone back to normal, we expect that to continue. And they're also pursuing export. Panjam is another company that did very well. Their results was amazing based on their investments in the equities market and other investments that they have. Panjam is a company that you want to look at as well. Cement company. No. The construction industry is that industry that stood up.
Correct.
During the demand for houses, the demand for construction is there. When you speak to the realtors, when you speak to even our very own building society, they tell you that the demand for mortgages, the pipeline is quite rich.
Quite strong.
And very strong. And you expect that construction to continue. The government has also noted that there will be some infrastructure spending, so that benefit will be derived from there as well. Another company, Seprod. I think Seprod has been really doing well. They will continue to do well. Just a very small percentage of their business is in the export, and they plan to push in this regard. That is only to add to the bottom line. Wisynco is another company. So those are a few of the stocks that you can stock up on to onto your portfolio.
I really like that. That construction point I know is really a strong point. I remember that the government pointed out that during the pandemic they actually stopped those projects and construction still rose by I think 9%, 7 or 9%. And of course that was in 2020. In 2021 they're coming back to it. So it was a really, really good picks I see there. So now viewers, I hope you like some of the early picks that you've heard there from us, and of course we'll be discussing them. So we are going to be taking your questions on social media and on YouTube, putting your questions, of course, and I will jump to the very first one from Kenisha Anderson, who asks, given the status of our economy at present, how high are the risks now in purchasing stocks, especially if you are buying for the first time?
Okay. Kenisha, now is the time that you ought to be buying. It is said that when everybody is leaving, that's the time you go shopping. The market is low. The market is at a low. I noted that in 2015 and 2018, it was the best performing stock market in the world. That means it was at very elevated levels. And because persons hear this, they would want to come to the market at that point in time. But that is at a very elevated price valuation. You want to be going to be buying. We do it in the reverse when it comes on to investment. Once we hear that there's a sale, everybody wants to go shopping. But when it comes on to the stock market and prices are at rock bottom, it is actually a sale. That is the time that you need to be buying. Perfect opportunity. What you need to do is to speak to an experienced wealth advisor, have a discussion with them, look at your investment horizon, what is it you're looking to achieve, and a portfolio can be structured and put together to achieving that particular objective. But the right time to start is now.
So, question from Facebook, from Francine Williams. Is it expected that the U.S. market may crash soon? I think that one is for Chad.
We don't expect that the U.S. market will crash in a dramatic fashion. With that said, though, one should always anticipate that there will be a tremendous amount of market volatility. And, a 10 or 20% correction in the markets were a frequent year-over-year occurrence. Over the last several years, you saw one like in March of last year, which was a good time to lean into risk. So overall, the markets are somewhat overvalued from a historical perspective. The overvaluation is because interest rates are low, but no, we don't think the market is going to crash.
Okay, I like that steady view. Yeah. And just to bring it back, I know I saw a question earlier, I didn't catch your name, but I think maybe you can answer this one for us. The question was, where can people who want to get that research information that VM provides for its clients, where can they see it?
All right, so on a weekly basis, what we do is we post our stock picks. You can find them on vmwm.vmbase.com. And you can search through, click on the unit trust icon, and you will see it listed on the right-hand side of the page.
Okay.
And just to add, Randy, on a daily basis, what we do is to give a review of the market, what happened in the stock market, and what you should be doing, what missed opportunities, and what are the opportunities that are there also on the bond. So what we do is a general global market coverage that you receive if you are a part of our client base. So I'd really encourage clients to be a client so that you're able to get these daily notifications and informations.
Yeah, man, because we pride ourselves on informing our clients. We don't just want to sit here and just do your work. We want you to know about what's going on in the market.
That is true. And like you said, this is available. It's available on the website.
It's available
but
on
also
the
there's
website.
a wealth of direct information sent
that
to you
comes to
once
your
you're a
email.
client.
Once you're a client.
All right, that is an excellent point. Trace, just again, if you can just tell them where on the website they can find that. You say it's under the unit trust section.
All right, so once you go to vmwm.vmbase.com, you will find it. Once you navigate the page, you can click on unit trust. You'll see the daily navs, and to the right, you'll see stock picks.
Okay.
You'll see the current one, the week before, and several weeks below that.
Okay,
So
so
once you
the
click on the stock picks, you'll get our stock recommendations and the analysis that goes along with it, as well as you'll see a number of other stocks and our recommendations beside them.
All right. This one I think is the next question is maybe a double-sided question. So I'll ask Chad if he can answer it, and also, or Denise here. The question is, what portfolio ratio do you recommend for someone with a low risk appetite?
Oh, well, that's a great question. If you are a low risk appetite, and that could be that you just buy individual bonds, which of course Victoria Mutual, Wealth can help you with. That would be that you should ladder your bonds where every year bonds are coming due and you're just rolling your bonds. If you are, say, for example, like my mother, who's 79 years old, she has a portfolio mix where 35 to 25% of the portfolio is in stocks and the remainder is in fixed income. That the reasoning behind having an equity allocation is because the growth in equities over a 10, 15, 20-year period will help in beating the rate of inflation. You see, the reasoning behind investing in stocks for people is that you want to beat the rate of inflation. That is the name of the game, and you want to do it with the least amount of volatility.
And locally, what is the...
For locally, you can take two approaches. You can buy into our equity unit trust portfolio, because as Trace and mentioned, the diversification, it's there, it's being managed by an experienced portfolio manager. Another option is in speaking with your wealth advisor, based on the fact that your risk profile is considered to be extremely low, you do not want to have more than 5% of your portfolio exposed to equities. And exposing that to equity, that percentage to equity, you want to be looking at blue chip type companies so that you're considered to mitigate any potential risk. So you want to look at the Grace Kennedy, those strong companies to add to your portfolio, blue chip.
I like that. Along that same line of companies, we have a question from the YouTube speaking to companies or a fund. And the question is, would it be better to focus on strong individual companies or on an equity fund when buying stocks?
I would, it highly depends on your risk profile, as Denise had alluded to earlier on. Focusing on stocks by themselves, it does give you the better chance to earn. However, the market is a very volatile space. So depending on your risk appetite. And the truth is that you can earn by focusing on the market once you take informed and educated, make those decisions. You understand? You can buy into blue chip companies, as was alluded to earlier on. And blue chip company does give you that edge. However, there are other companies out there that is just a decision away from spiking.
Yeah.
That is
You understand? So once you make educated and informed decisions, then, and also along with your risk profile, because if you are going to sweat every day, you look at your portfolio. You shouldn't be doing direct stocks. You understand? They're the unit trust products, and we do have 9 of them split into 4 US and 5 Jamaican, with varying difference of risk profile that you can look into.
Wow. All right. And I like you mentioned the US and the Jamaican options here. Going back to the US, Chad, this one is on you. Robert March is asking from YouTube, how will the $15 minimum wage affect the US economy?
So that $15 min will actually cause profit margins for certain companies to go lower a bit. Really, though, the real issue is not the min wage, but rather right now today, to find labor, it's really hard in every industry. So that we're going to probably see income inflation, which will go much higher over the next 18 to 24 months. That will squeeze profit margins. And when doing that, that could also affect S&P 500 earnings. So that we're anticipating happening at Washington Crossing Advisors.
Okay. Thank you very much, Chad. Going back to the YouTube questions, Daniel Evans is asking, if you could just repeat, how do you borrow against equity? If you could repeat how they borrow against equity. And I should point out, I don't know if you know it, but what the interest rate is also on that.
All right, so I love that question. I really was hoping that someone asked that question because I didn't get to mention it. Once you open your account with us, pure and simple, what we do is ensure that you get email, electronic indemnity. All you need to do is to send an email for that you have interest in the margin facility, and we execute same. Very simple. There's a minimum though. You understand? The minimum is $250,000 that you can borrow, which means, and it is 50% of your portfolio. It means that you'll have to have a minimum $500,000 on your portfolio in order to borrow against CM for the equities.
Yeah.
But also remember, you can borrow against equities, but the unit trust, the equities is 50%, and there is a legit reason for that based on the volatility of the market. It can spin so easy, so that's why it's 50%. But for your unit trust, other fixed income like bonds and repurchase agreement, it gives you a higher percentage.
Oh, that's wow. And again, just for anybody who may be watching for the first time and wondering how it works, let's say you buy some stock, you want to keep that stock. I'm not an advisor, but let's say you buy some NCB stock and you want to keep it for the long term, you might then say, okay, I want to keep this stock, but I want to still use some money. You want to get to use your money without selling any of the stock. What VM does is VM allows you to just borrow against it, so you get the best of both worlds. You get to keep your stock, you also get to borrow the money to do what you need to do. And assume that you use the tools that they gave you, the good research, the excellent advice, and your investment continues to rise, you get the benefit of the rise in investment, plus you have the money that you borrowed. And you can also use your investment to pay back the loan.
And in addition, a lot of our clients have used their margin facility to further invest in equities.
Yes.
So that's a double whammy right there.
Yes.
You understand?
Yes.
So we take advantages of IPOs, APOs, or Grace is doing phenomenally well right now, let me get some Grace. So I take a facility against my current investment and invest into Grace.
Yeah, that's one of the things that I use some of my stronger holdings, borrow against it, and I use that for the IPOs, especially because so many of the good IPOs tend to be oversubscribed.
Right.
You don't want to lock your money up for too long, so I borrow against it. Use your money, thank you very much, and invest it there, and I get the best of both worlds. This one I think might be a little bit more of a technical question. It is asking about two stocks. It's saying, and it's from Jamaica on YouTube, is Indus Pharma and NCB a good buy if your focus is more on getting dividends? And if any of you got that one, Denise?
Both companies are good stocks. Good companies, especially if you're looking for the long term. I believe that Indies have a way to go in the space. They had a bit of a challenge just recently in securing a contract. But I do believe for the long term, Indies, buying it at the current level. I mean, Indies came to the market, I believe,
I think at $1.
at $1.
I think so.
And I think it's $1 and now trading around $3 plus. NCB, excellent diversification in terms of their revenue stream. You would have seen they have added which is not very new, but they have added Guardian Holdings to it. They are expanding regionally. We do believe that NCB is a good play. You might not get that return that you're looking for in the short term, simply because of the connection in terms of the slowdown with the economy, persons where loans are concerned. But picking up NCB at the current level and taking a long-term approach is a good addition to add to your portfolio. It's always good to include dividend payment stocks because that is one way in which you earn. And given that the Bank of Jamaica has lifted that ban from financial institutions to pay in stocks, that's good. So it's always good to have that dividend coming into you that you can further reinvest. So both stocks are good options.
That's correct. If I could add to that, I know after the BOJ lifted their ban on financial holding companies, not ban, but the request for financial holding companies, NCB actually very quickly responded and they paid a
Yes,
$1 dividend.
They did.
Yeah,
They
and
did.
they have, and that I think is just the start of it because historically NCB paid a dividend every quarter.
Yes.
So
Yeah.
people buying now would be able to benefit in the future when they return to that.
Yes, and Scotia is known to be a good paying, dividend paying stock as well. So
Okay.
adding these companies to your portfolio would definitely boost your return.
Okay. This one more again in your wheelhouse on bonds. Somebody's asking which Jamaican dollar bond is best to buy for the highest returns or quarterly payout to investors?
So for that particular question, I would not, my approach is to say, is to have a conversation with the client. What exactly is your risk profile? I can show you a bond that is giving you 20% in terms of return. But can you deal with per annum? Because can you deal with that level of risk? So it all depends on your risk profile. The universe of bonds is just unlimited compared to the stock market. So you are able to pick up bonds. It all ties to your risk profile. Definitely not looking on the side of the government because those bonds are at very low returns simply because the government is not in that position in which they're crowding out the space and issuing a lot of bonds and demand for money. So the yield on that is pretty low. But on the corporate side, the beauty about the government not coming into the space is that it allows the institutions, the brokers, their investment banking arm of their business to get creative and to structure deals for companies. And as a result, those bonds that you can buy into. The only concern might be is that if you are considered to be an accredited investor, but where you can get exposure to a lot of these bonds is from the unit trust. And a perfect avenue is the unit trust, the Jamaican dollar unit trust at Victoria Mutual Wealth. You can get the exposure there as it relates to the bond with a very good return.
All right, another question for you, Denise, is how can I trade my US stocks with VM?
Okay, you can actually purchase, trade US stocks with VM because we offer that facility, that platform, in which we give to you, it's in the palm of your hand, in that you can do your execution. So similarly to how you are able to execute on JTrader, we have a platform, an interactive platform that we're able to connect to our clients, and they're able to execute, they're able to buy and sell at their convenience. And the fees are very competitive based on our survey of the market. So you're able to buy US equities from VM Wealth Management.
Okay. And keeping it overseas, I know we get this question a lot. People in the diaspora want to know if they're outside of the island, how do they get started? You know, we have a large diaspora. How do you get started if you want to get in?
You see, one of the benefits of the pandemic, and I say the benefit because a lot of the times we need to see documents like right in front of us in order to execute transactions. What the pandemic did for us was allow us to take information via the internet. So you can send, once they are proper notarized and stuff like that, we will execute. We will open your account while we are awaiting the originals. You understand? And you can start investing even before the originals hit here. So all you do, you speak to an advisor, call you, complete documents over the phone. What we can do is send you pre-completed documents, or we can send you the documents and you can complete them, sign them, get them notarized, and send them back to us. You can scan them back, right? While you are sending, we start the process, open your account, you can start doing your business while we await the originals.
So so being overseas is no longer
that is no longer a barrier.
Okay, that's wonderful. And that works if you're in the US or the UK?
US, UK, Caribbean,
right.
All the other spaces.
I like that one. I remember this earlier question also.
I can tell you not to stop it, but I recently opened an account for somebody in Japan, so.
Oh, wow. Oh, wow. So the Japanese crowd, big up.
Yeah, man.
All right. A question going back to the JTrader platform. What is the account minimum to get on? Or I should say really an equity account. What is VM's minimum balance to open an equity account?
Okay, so gone are the days of the myth where you have to have an elaborate amount of money in your account in order to start doing business with any dealer, right? With us, the minimum to start is $10,000.
10,000 Jamaican dollars.
And if you want me to repeat, the minimum to start is 10,000 Jamaican dollars.
Less than 100.
You understand? That's less than 100 US. And you can start trading.
Yeah.
Okay, wow. I like that. So you guys hear that if you have your $10,000 or more, you're free to come into VM. And like I said, they give you access to JTrader, which I believe is the best trading platform currently.
And I want people to understand this, because $10,000, you can start. And remember our core function here at VM Group, inclusivity.
So you give the people the 10 grand the same service as the 10 million.
That's what I want you to understand.
Okay, I like that.
Great.
Going back to the portfolio questions, we have one from Romaine Higgins who asks, what is the ideal number of stocks that one should have in their portfolio so they can experience a good life in the years to come? That's right, Romaine, we all want a good life.
Well, the definition of a good life all depends. It's quite relative to each person. What is it that you want to do in years to come? Is it that you just want to be on the beach? You just want to relax? It all depends. But what you should aim for is that while you're sleeping, your money is working for you. You should have different streams of income. When you look at your portfolio, you're not just looking at an equity portfolio, but you're looking at what are those passive income that is coming into you. So you look at investment in a very holistic sense. The stock portfolio is just one aspect. What are those
Very
income
diverse.
that is coming into you? It could be real estate, it could be dividends, it could be different things that are able to come together as one and help you to achieve that particular life that you're looking or you're in search of.
All right, I understand. And I know, Romaine, you asked about to get into the good life. Everybody wants to be rich, but you don't get to the riches very quickly. So another question, and maybe I'll take this one, about dollar cost averaging. Somebody said they heard about dollar cost averaging, but what does it mean? How does it work? And how does it work with equities? So dollar cost averaging is, in my view, I use it like how I'd save. It is the placing of a certain amount of money in one investment, regardless of the cost of that investment over a period. Now, let me say it again in case it's not clear. Say that you save 10 grand every month out of your paycheck, right? And let's say you want to, you think about, you find a stock, you speak to your VM advisor, they help you, they say, you know what, Victoria, VMIL is a listed company, and you guys are speaking about, I think, tripling in the next 10 years or something like that.
That's what the analysts say.
Yes.
We don't recommend our stock, although we
No, the
do
company
know that.
itself, your CEO spoke about the size, the rework and the size of the company.
Yes,
So let's say you want to enjoy that as an owner over the next 10 years also. What you would do is every month, that $10,000 that you save, you buy $10,000 worth of VMIL, right? If the price is $10, you buy 10,000 worth. If the price got to $20, you buy 10,000 worth. If it dropped to 15, you buy 10,000 worth. What tends to happen when you do that is that over time, the average that you have put into the stock tends to be the average price, your average price that you've paid, tends to be much lower than the share price, right? That is actually one way in which you can get very, very wealthy over a longer period of time.
Yes.
I think of dollar cost averaging as my personal saving or my personal pension. Yeah. And so dollar cost averaging is a really, really strong tool, especially if you don't have a lot of money to start.
Yes, yes. You just need to have that discipline and commitment to be purchasing a block of stocks. If it's $10,000 you have committed to, each month you go in and you make those purchases.
And it tends to work out a lot quicker than you
Yep.
think. I know there are companies on the exchange that have grown within a period of 5 years, no exaggeration, over 3,000%. In fact, the JSE itself is listed, and if you look at the JSE's share price between when it listed and today, I believe it's over 5,000% growth.
Yes, yes.
So imagine saving little by little, dollar cost averaging, and seeing that growth over 5 to 10 years. So it is a really strong tool. Another question from Chad. Do you anticipate an eventual migration of capital from the stock market to the crypto market over time? I don't know if you want to take that one, Denise, or maybe Chad. Oh, for Chad. Apologies, not from Chad, it's for
Sure.
Chad. So Chad, do you expect to see a lot of money moving from the stock market into crypto over time?
No, I don't believe that to be the case. I know that right now the cryptocurrency market is quite a frenzy, and that I believe is a risky market, and investors should be really careful right now. Maybe perhaps 5 years from now, or it's reminiscent of the dot-com bubble, actually, of '99 that I watched and experienced. So I would be very cautious about cryptocurrencies, focus on quality, listen to Denise and what her team is saying regarding asset allocation, but please don't be speculative at this point.
Also, you have to take into consideration, no matter what happened in the crypto space, the need for diversity is always out there.
That's true. That's
Yeah.
true.
Yeah.
That's true. And diversification itself, it helps you avoid a level of risk. Really, it's a risk mitigation tool.
Most
And the risk in crypto, as we've seen, it can fly, but it can also fall
At
very,
the very same pace, or even faster.
That is true. I think maybe I can just touch one point again for an analyst that might want to know. If you can just remind them of the unit trusts that are available, because you mentioned some being local, some being US based.
Yes, so we have a total of 9 unit trust portfolios, 3 that are denominated in US dollars. 4 that are denominated in US dollars. That really covers the range of investment profile. If you're considered to be aggressive, conservative, a moderate investor, you can align yourself to a particular unit trust portfolio. You also have the equities portfolio, local equities. You don't have the time to be watching the market, doing the research on your own, doing your execution. You can buy into that equities portfolio. And there are also Jamaican dollar bond portfolios that are able to give you returns that are far outweigh if you were to place your funds on repos or place your funds in a savings account. That's a very wise method in terms of investing for fixed income type investment.
I want to add about that portfolio. It's probably one of the only portfolios that even during the pandemic, it was unaffected.
Wow, almost recession proof.
Yes.
Or pandemic proof.
It was pandemic proof.
All right, another question here is that what is a better strategy, dollar cost averaging or using debt in the form of an equity secured loan, margin or unsecured loans?
It is,
It's really a mixture. It's really a mixture based on your portfolio. If you have a good size portfolio, and as you noted, Randy, you don't want to be selling these stocks because the prices have fallen off. You believe these are good value stocks. You don't want to be selling them. you take a margin loan against it. You can get approximately 50% of that stock value, and you get that capital, and you're able to use it to invest or to do whatever you want to do with it. I think the dollar cost averaging that you described is a very disciplined approach, and I really think that investors ought to practice this method, committing a particular amount to the market. You want to build up your holdings in whatever stock. You don't have a huge lump sum to do so, but each month you're buying 1,000 units of this stock, 100 units of this stock, with on the stock exchange using the NASDAQ platform. That's the platform that the Jamaica Stock Exchange uses. You can buy a minimum of 1 unit of a stock. So it really depends. You need to have a discussion with your wealth advisor and to see at that point in time which of the methods or the strategies best work for you.
Okay. And just another viewer's asking us to repeat, you do offer the margin loans, but what's the interest rate on that margin loan?
All right, so currently, depending on the season, right now it's summer, we should be having a promotion shortly, or interest rate vary dependent on amount sometimes, and that can be anywhere from 9 to 11%.
And I must admit, Randy, our rates for a margin loan is very competitive. Within the space, you're having institutions giving margin loan rates at very high teens. I think picking up, you're doing your margin loan with Victoria Mutual Wealth, picking up a 9% or a 10% is very good.
Yeah, and again, I should point out one strategy just in case anybody's wondering. I think it's too complex. That margin, the fact that they offer margins, it allows you the beauty of you can get into something fixed, like a good bond or a good unit trust, and then borrow against that and get into the stock market with the borrowing, right?
Right.
So you get a little bit of the safety and you get a little bit of maybe the excitement.
Yes.
With the support from VM in both areas.
You can use the margin loan to create diversification in your portfolio. So if you started with equities, yes, you could borrow the funds, invest it in UT, the unit trust portfolio.
Okay.
So that is just one way for you to grow your portfolio.
Okay, so another question, what is the minimum to enter the U.S. equity market?
The minimum to enter the U.S. equities market is $2,000 US dollars.
Okay, so that's one's a little higher.
Yes,
Yeah.
it's a little higher. It's $2,000 US dollars, and you're able to start trading on the interactive broker platform in which we offer to our clients.
Okay. Another question, what are private equities, and are private equities available on both the US dollar market and the JMD market?
So at this point in time, no, not on the local market. As it relates to the private, definitely the Jamaica Stock Exchange is looking to explore that particular area because, as you know, the private equities market is not companies that are listed. It's these companies that are raise debt and to expand their business, etc. And this may be done in the form of a bond. So what the stock exchange is embarking on is looking to list some of these issues on the Jamaica Stock Exchange for them to be traded. But as it relates to, it's not very developed at this point in time, but it's definitely an area that the stock exchange, along with the brokerage community, are pursuing.
Okay. A question again around the U.S. equities. If the minimum is $2,000, you can't necessarily afford it. What options are there? Does VM Wealth have any options to help somebody who...
I would say to you, reach out to Victoria Mutual Wealth. We will have a discussion with you. We will have a discussion with you to see how best we could assist. You could possibly start in another investment, grow that investment, and when it gets to that point, you're able to go into it. But most importantly, we'd want to have a discussion with you because we want to assist our clients in achieving financial independence in growing.
Another option you can look at is our unit trust product. So the US equities, the US equities fund, it's $500 to get started in that, and that gives you the opportunity to build on that, and later you can start trading on your own.
Yes. Yes. Yes.
So you get the double benefit.
The double benefit.
Right.
Okay. Another one, well, we asked about the portfolio ratio, but I don't know if you gave me a good answer on that. In terms of locally, I know people like to have that nice small split between, you know, X amount of fixed assets. There is no one size fits all answer
Never.
generally, but what
No.
percentage? How?
It really depends. It really comes back to the investor. Because for me personally, a very small percentage of my portfolio would be in fixed income because I consider myself to be a risk taker. So it really depends. So it's very important to be having that intimate discussion with your wealth advisor. And at the end of that discussion, your wealth advisor would make a recommendation to you, because what fits for you, Randy, will not fit for Trace. It really ought to be a tailor-made type of approach in designing your portfolio and the allocation.
Okay. Anna Ramsey from Facebook asks, can we start the account opening process online, or do we need to visit a branch?
I mean, we earlier alluded to this point where we can start, you can call an advisor, right? Or, somebody will definitely reach out if you go on either our YouTube page or Instagram page. Somebody will reach out to you. We can start the process by a telephone conversation. What I say is, I also alluded to the fact that we can pre-complete documents just by conversation, send them to you via email. You review, sign, have them signed out by a JP, and then send them back to us. If you come in branch, you wouldn't need a JP because you would have been signing in front of a VM officer.
Okay.
But without the VM officer, you need to get them notarized.
Okay. Okay.
Okay.
So with that said, I don't know if there's any, we have one more from Odane Tucker, who is asking again about cryptocurrencies. Does VM offer that at all? Because I know that's something that the JSE has been speaking about getting into.
At this point in time, no. We are not, or we do not offer cryptocurrency trading. Is it in the future? I do believe so, because we are working with the Jamaica Stock Exchange. You would have heard my CEO speak to it, that this is an initiative that we're working on. Of course, we have to get approval from our regulators to be able to offer this to our clients. It's an emerging asset class, and as such, there's still a lot to understand about it. But one thing that we will commit to, or we commit to as a Victoria Mutual Group, is to educate our clients. And we will definitely, once we are in that space, or prior to doing so, we have had a webinar on this, is to kind of educate our clients what this is about, and so that they are able to make informed decisions. Yeah.
You don't want them to just be hearing about it and VM not saying
No.
anything.
So it's the buzzword cryptocurrency, and persons have seen how Bitcoin has appreciated in value, and as a result, they want to get in. But on the flip side, Bitcoin has dropped significantly as well. So it's about understanding the type of investment that you're getting into. Do I believe it's an emerging asset class? Surely. Do I believe that it will be around in the future? I do believe so. But there's still a lot to understand, and it's very important for investors to educate themselves before they make a decision in investing.
And there's also, you have to pay attention to the legitimacy of some of the persons or brokers offering in same, because I was informed recently that a client lost several $100s of units because they invested in somebody that wasn't legitimate.
Yes.
Wow.
Yes.
Wow.
Yeah.
That's a very, very serious thing. I remember you want this sort of information now, you want it continuously, you can always reach out to VM on social media. They're Victoria Wealth Management on YouTube and on LinkedIn, and Victoria Mutual Group on IG, that's Instagram, and on Facebook.
I wanted to add, because I know I didn't mention it, and while we're talking about YouTube and stuff like that, what I didn't mention is that whenever once you're onboarded to VM Wealth, you are then sent a link where you can sign up and have a live view of the portal. So you can see your investment. You also can make requests for deposit through the portal, and it's very user-friendly. So,
especially for those persons who are overseas that want to remain connected to their investment, that's a very good feature.
And once you sign on to the platform, you would not be requesting statements. You understand? Because you get your statements once you are active. You get them within the month, or on a regular basis, we send them quarterly.
Yep.
But once you do a transaction, you will see that on the platform.
All right. So thank you guys very much. I'd like to say thank you, of course, to Denise Marshall Miller and Trace Gale, and of course to Chad Morgan Lando, who is with Washington Crossing Advisors, joining us from the US. And of course, thank you, the viewer. Again, you can always reach out to VM on social media, on Victoria Wealth Management on YouTube, and also on LinkedIn. And you can also throw your questions, not just in this session, but you can send it to your actual VM advisor, either as a client or if you want to become a client, okay? And of course, any further questions, you can also send it to the email at wealthinfo@myvmgroup.com. I'll say that again, wealthinfo@myvmgroup.com, and also call them at 876-960-5000. That's 876-960-5000. Apologies. I am Randy Rowe, and I am hoping that you've been having as good an evening as I've had. And I'd like to thank you and thank our guests and say good evening.
Good evening.
We'll see you soon.
Not everybody can build a bed, but no matter what you can't do, with us, you can build wealth. Our top-performing unit trust property portfolio was created with a combination of high-performing real estate investment options. Call us at 876-960-5000 about building your wealth today. Not everybody can be a top-class pizza chef, but no matter what you can't do, with us, you can build wealth. With a VM Wealth Global Income Max US portfolio, you could be on your way to your wealth goal. Let's get you started. Call us at 876-960-5000 about building your wealth today.